Now, guys, so I've had a lot of questions, I've had a lot of requests from people just to understand how I came by these buyers. Now, I usually look out for three things, right? People that know how I trade actually understand this. So, first thing I look out for is the directional bias. Now, when it comes to directional bias, it talks about which trend the market is leaning towards, right? So, are buyers in control of the price action right now, or are sellers in control? Are buyers leaving the market and are sellers tapping in, or are sellers leaving and buyers are tapping in? That is what directional bias does. And how do you do that? Let me just do a brief walkthrough of how that happens. Now you can see from the 4 hour time frame, right? This 4 hour time frame, you can see series of new highs are being created, right? You can see this break of structure to the upside, right? This is another break of structure to the upside. This tells you that buyers are actually pretty strong. So we are seeing a lot of impulse moves and minor corrections to the downside before the impulse move. So corrections, impulse, corrections, impulse. Now, when price corrects itself, it usually just looks for a POI, right? Before it creates another move, right? So the POIs can be your fair value gap, your demand or supply zone. It can be it can just be anything, right? So anything can actually push price, but before price makes an impulsive move, there has to be liquidity sweep. Now, so first thing I look out for is the directional bias. We are very established that this market is quite bullish. Second thing is POI, right? POI, then liquidity, right? So in whichever order that you want to do it, but directional bias has to come first, right? Now, directional bias, we already identified that buyers are in control. So only thing I'm going to be looking out for here is just buys, right? So now let's come. This is the two. I've come down to the 2 hour time frame. Now you can see how price has been moving so far. It is very clear on this level. You can see after this high was taken out, price did a correction here, came down, right? But it didn't start selling immediately, right? You can see that it came down into this open price range, this fair value gap right here. This fair value gap was caused by this impulsive candle, this big ass candle. You can see it right here, right? Pardon my manners. So now, before this move happened, what can we identify? You can see that price literally swept liquidity at this level, right? Swept liquidity at this level, taking out this previous low, and what did it do? We saw another impulse move, right? So look out for under your POIs. After marking out your POIs, look out for your liquidity sweep before you take your trades, right? So it's very important. Now that's one. Now for the second impulse move, this was the first one, right? Right, you saw the correction, right? After it broke this structure, you saw the correction. What did it correct into? It corrected into this demand zone. This is the demand zone. Now you cannot exactly just trade from the 2 hour time frame. You have to double down and go to a lower time frame. But I'm just trying to show you the kind of structure that you should look out for when you're trading for the higher time frame, just to give you a bigger picture before you take your trades on the lower time frames, right? Now let's go to the 1 hour time frame. Now you can see price action a bit better, right? You can see this liquidity sweep better, right? You can see this demand zone better, right? Everything actually checks out, right? So now let's go back to the 30 minutes time frame. Let's double down again. Let's go back to the 30 minutes time frame, right? So this is much more clearer, and you can actually take your trades from these levels, right? So break of structure, this correction on the downside into the fair value gap, right? Another break of structure, correction, liquidity sweep. This equal low is inducement, is liquidity, right? So price has to take it out first before it started the impulse move again. So this is quite clear and precise if you do not trade against a trend. Don't ever trade against a trend. I do not recommend it, right? So we have established the break of structure. We know that buyers are in control. So only thing we are going to be looking out for is buys. Now, for this particular trade that made people so much money, I had. So now let's go through this last trade, right? One thing I told immediately I sent this trade from this particular level, I told everyone to shift their stop losses. The stop loss was around here earlier. I told them to shift to this downside. Why did I do that? That's because The moment price tapped into this level, a lot of them start positions from here, right? So they start positions from here, and that's not how it's supposed to be, right? So immediately you see, immediately price taps into your POI, don't take your positions immediately. So immediately another person must have seen this particular this rejection. Person must have taken the position from here and say, okay, I'm going to start stacking positions. Now, this particular retracement must have taken them out, right? Must have taken them out because this was a sweep, and price always needs to sweep liquidity before it actually begins an impulsive move, right? So price would have swept their stop losses, taking them out, and that it would have gathered enough liquidity to resume the uptrend, right? So I told them increase your stop losses and let us use another level. So that was why some people made so much money, right? So important points to take note of: your point of interest, your liquidity levels, and your POIs, right? Now, for this second trade, I don't think I've sent this one so far, but I took this on my personal account yesterday, and it was also a very, very profitable one. Now, for you to check out POIs better, I usually just come down to the 5 minute time frame sometimes, right? Now on this 5 minute time frame, you can see price is a bit choppy, but it's clear, right? So look at this POI right here at the end of this at this chart, this order block. So now you can see this order block. Let me just delete this. So you can this order block at this level. Look at this equal low liquidity, right? This trade played out midnight, so I don't think anyone would have taken it. So price, what did price do? Took out this equal lows, tap into this level, and voila, profit. So trading volatility indices is very easy. If you want to get started, make sure you click the link in our bio or you click the learn more button, and I'll get you started right away. And when you join the community, make sure you click the pinned message on the group on how to gain free access to the inner circle and how you can get started with our free signals. We are the only community in Africa right now that actually offers a free VVIP. So you don't have to pay a penny to gain access to our VVIP. So now we have two offers coming up for everyone that wants to become a profitable trader, right? If you are tired of bringing your account back to back, this offer is going to change your life, right? So there's a mentorship program coming up this particular month, right? And it's just going for $50 only, right? I shifted it from $100 to $50 just so that everyone can be able to afford it. Now, if you make profit on my signals, this is the best time for you to actually put that profit into something good, into like building your own trading career, right? So it's going to be very, very educative and it's going to be amazing. So the mentorship is going for just $50 only. Now, if you are someone that cannot afford mentorship yet, I recommend buying the book of synthetic indices. This book was 50,000 naira before. Now it is down to 10,000 naira on our seller. So click the link. I'll attach the link to this particular video so that you can purchase it straight up. So if you want to get started, buy the book or sign up for our mentorship program. And trust me, synthetic indices will change your life in 2026. So that's the end of this video, guys. I'll see you in the next one.